Good morning, Paul Georgie from Allendale. It's February 12th, Tuesday morning, and grain markets are mixed here this morning. Corn under pressure again, down 3 to 5 cents as we speak. Soybeans, however, a little bit stronger on some short covering strength, I think, in the soybeans. But we'll talk about the fundamentals first. Argentina looks like they are probably getting a little more rain. They've added a little more to the forecast here for later this week. And I think another fundamental is that many of the exchanges around the world are closed today for Fat Tuesday. We've got South America closed. We've got Malaysia closed today. China is on their New Year holiday. So expect some very choppy, volatile, sharp moves in the grain markets today. But to figure out why this market's under as much pressure as it is, I think it's because of follow-through liquidation. Yesterday was the first day we closed below the 200-day moving average in the March corn. That created some more selling pressure here. And the reason we talk about the 200-day moving average is many believe that's a real key number in determining what the funds are going to do. If it's below 200-day moving average, they're sellers. If it's above a 200-day moving average, they many times are buyers. So that's why we talk about the 200-day moving average. And we've seen it in the soybeans. Friday, the soybeans closed below their 200-day moving average. We've seen pressure, sharp move down again yesterday. So concerned about that type of liquidation in the corn market. Also, some key numbers are the lows that were made in January. December corn, for instance, has got resistance now of the January low, which is around the 570 area. November soybeans, key number there is this 1250 area in the November soybeans. If we close below that, could also trigger some more selling pressure. So things to watch as we go forward here. We've got the Ag Outlook Forum on 21st and 22nd, which next week the USDA is going to give us their first look at what they think the 2013 crop's going to be. They did release their baseline numbers yesterday, which is used more for budgeting than anything else, but they did put the yield at trend yield at 163.5. And as we go forward this year, yield is going to probably be the most important number to watch because of the poor yields that we had last year. If we're anywhere near trend yields, as the USDA showed yesterday, we're looking at a 2 billion bushel carryover next year. So yields extremely important as we go forward here throughout this 2013-14 marketing year. The cattle market, we've seen cutout values mixed there yesterday. Choice up 60, select down 47, pork cutouts were down 54. The problem that we've got in the livestock trade right now is twofold. One is liquidation by funds and technical pressure in the market, but the fundamental reason is the demand that we've got for product. We're seeing the early part of 2013, we were expecting less meat production. We're actually seeing only slightly less meat production with less cattle being slaughtered. Weights are heavier, and that is causing a burdensome supply right now of beef. However, we are optimistic. Our chief strategist here at Allendale, Rich Nelson, talked yesterday in our weekly research meeting that he believes we could see a sharp rally in April cattle because we're going into a time period here where cattle supplies are going to be much less than they were a year ago, and with the supply of which should in turn cause less supplies of beef, and that could turn this market higher. However, We've got to realize, though, we've got to let the market tell us when it's ready to turn. There should be several dollars available on the upside once we turn, but we need a bit of excitement from the product, and with the East Coast storm, that also slowed down movement, and a backlog here of beef at the processor. So looking forward, we expect some very choppy session today. Look for some possible bottom pickers in the corn market and in the grains, as the market is extremely oversold. We've been down 8 days in a row now in the corn, so wouldn't be surprised to see a bit of bottom picking here as far as the corn market goes. So stay in touch with Allendale's research, and stay in touch with the Allendale Advisory Report. We've redesigned our homepage on the web. Take a look at that. Make sure you get signed up for the Allendale Advisory Report. If you haven't got a free trial, sign up for that and follow us here for a few days. We've got a lot of information there, and hopefully that'll help you make some good trading and marketing decisions as we go forward here in 2013. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. Have a great trading day.